please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
And Ajay Srivastava is with us, CEO of Dimensions Corp Financial Services. Ajay, good morning. So, it's been such a narrow market over the last few days. Take out the 7 Nifty stocks and we could be, staring at a big downtick. And in the broader market, we have seen the kind of decline in Nifty Junior and mid and small caps. You reckon we are now at a stage where you should be building portfolios in good quality stocks?
No, Anuj, in fact, unfortunately, it's changing. The scenario is changing, and the scenario looks like you almost feel as if the ground is being cut under you, because it's not about building portfolio. It's about the environment that we're operating in. Nothing seems to be conducive. One thing goes well. You saw the multiplex stocks. They get butchered by some absolute idiotic regulatory policy. You've seen the ASM impacting the mid caps. So we're not sure exactly. There is no certainty of policy. There's no certainty of a regulatory mechanism to make it sure that, listen, the worst is over and we're going far. Number two is, economically, IIP data is still on a slope. It's not moving up. It's from 8%, it's down to 4% this time. Now, when IIP slopes down, Anuj, there's very little case to be made that the broader market will move up in this direction. That's not going to happen. When IIP goes down, means the demand in the country has gone down, and the first people to get affected are the smaller companies, because larger companies can take a better share, cut prices and still survive. The smaller one can't. So, so the case that, yes, it's a good time to build a portfolio, I think is slipping under us, because the regulatory scenario, environment, economic growth, everything is kind of conspiring together to give in a feeling that, listen, it's not the worst is over. The worst can still come. June results will show some part of it. But more than that, what do you do with regulatory overhang? What do you do with the policy directions which are so ad hoc that your best planned portfolio could go haywire in 30 seconds?
No, I take your point. I think there were others who were sharing a similar point of view that there is a subterranean lack of growth, and I think it was a Credit Suisse report which said that the best is over in terms of even GDP growth. And the IIP numbers also, as you point out, indicated that in May there was a sharp cut. But Ajay, there is also a rural theme playing. Most of the FMCG guys we spoke to, including a person like Godrej yesterday, Vivek Gambhir, he's more an urban supplier, but he said that the rural growth is growing faster, rural market is growing faster than urban for now. If you buy that idea, would you be buying any of the FMCG or rural related plays?
Okay, I already hold the FMCG stocks, but I don't agree with what they're saying. What they're not saying is that they are getting market share from the smaller players. It's not demand which is driving them, and no, you don't want a Godrej or a HUL to say that listen, our competition is going down, so we are getting grab a bigger market share. Number two is, thanks to the road infrastructure, they're going deeper and deeper into the country, where the regional brands were kind of holding the fray. Now, regional brands are losing out because they're small, and their access was the bigger advantage. Their access advantage is being dissipated now. So I'm not sure I'm buying into the theory that it's the demand which is growing this HULs and others. I think the story is also partly demand, but partly access to this new market, thanks to road. And more importantly, the disappearance of mid-cap and small-cap and the regional brand, the rural brand. If you, Lata, I don't know, you may not have traveled, but some people like us do travel to hinterlands. You see a lot of these smaller brands sitting there locally in each areas. Now, those are the ones which are disappearing, and that price competition is disappearing from the system. So it's not necessarily demand. I think it's also market share which is growing for the top 4 FMCG companies.
I think, Ajay, hi, good morning. I think one thing that this year has taught us is that if you invest in the market leaders, you will not only preserve your capital, you will grow it as well. You think that strategy will work for the rest of the year as well? I mean, not just HUL, but, the Bajaj Finances of the world, Britannias of the world. Do you expect elevated levels despite steep valuations?
Well, Sonia, I certainly think. And I think the reason being, the rest of the market is still playing catch up. They are under-invested stock. Even if you look at the holdings of the stock, the shareholding pattern, you see very small amount of retail holding in those stocks. It's a mutual fund, it's a FIs, and it's a 51% global owners or the Indian owners, whatever it is. So I think if the slice of the share ownership is so small that even if you took a 10 to 20% movement from the mutual fund money into the large stocks, that causes a big rally because there is no supply coming. There's nobody diluting in the stocks. So with limited supply, and more churn as more and more people realize that, listen, this is the only lifeline in a choppy sea. So there will be a definite move, and it's already happening. You're already seeing these prices don't correct. Day in and day out, market can go up and down, they don't correct. And I think the reason they don't correct is, one is you saw HUL, 19% growth rate in profit. Fantastic in an environment like this. You saw Indus in 20%. So they are in the range of 19-20%. Nobody else is going to be. So demand supply of shares and the assured returns of about 18 to 20% profit growth quarter to quarter, I think will drive this market further and further up, and will become further and further skewed. People are still playing catch up, but there is a whole amount of portfolio still waiting to be churned.
Okay, I can sense the angst in your voice, and a lot of people believe that there could be a debate on the regulatory decision, but if the decision is made, and if you have other states following it up, how do you approach a stock like PVR? You have been, of course, a fan of the stock. You have been a fan of Ajay Bijli ever since the IPO. Thoughts on this? Has been a multi-bagger, but from here on, are the risks too many now?
I think it will be struck down in the court. I don't think it's a risk. I think it's an opportunity. I think it will be struck down in the first court challenge it will get. It will be struck down because that's ridiculous. Now, where do you take it to? You go to a restaurant, you go to a hotel, you go to any establishment, you go to see a show, you go to see a play, for instance, and you are not able to buy, you will take your own food there. Now, that's ridiculous, absolutely. I don't think it will stand the legal scrutiny even 1 minute. So I believe, and we are holding on to the stock, we are adding up, in fact, to the stock at this point of time. So to that extent, we are biased. Okay, that this will not stand legal scrutiny. And let's be honest, this is the one industry which is fully nicely Indian owned. They're doing well. They brought international experience to this country. They are facing serious competition as well. They're facing serious competition from the streaming industry, the Amazon Prime and Netflix. It's not like they're a monopoly. They can make any amount of profit. So, his industry, fully homegrown, which has done well, brought experience to smaller towns of India. Why do you want to kill that industry? But we are confident. I think legally it will not be permissible to say, bring your own dal chawal into the theatre and lay it out on the mat, and then nothing stops you. Why don't you sit down and have a picnic inside the theatre?
Ajay, I'm not getting into the ideological pluses and minuses. I'm just stating a matter of fact. It was the Bombay High Court. It was the court which told the government. It was a PIL which said that people should be allowed to take their own water and stuff like that. And the court directed the Maharashtra government to make a rule allowing it. So at the moment, we don't know how the court will vote. This came because of a directive of the court, and the Maharashtra government has not yet made that rule. A minister shot his mouth and said that the rule is coming. That's the situation now, so let's not be too sure about how the court will rule.
Absolutely. No, Ajay, I just had a follow-up question. Even
Lata,
yeah, go ahead.
The point is not that, Lata and Sonia, the point is that when we as regulators, when we talk to the market, when we talk to consumers, when we make a statement, I think there is an element of responsibility on the impact, what happens on the economic activity, what happened to the companies. I think I'm not disputing the merit and dismerit of this case. I'm just saying that we need to be more circumspect when we address large sections of our statements to a community which is wealth creating, which is economic activity. And the kind of upheaval you can cause this even before you are right, a formal notification comes. Look at the upheaval already has happened. Damage is done. So I'm just saying we need to get an environment which is more supportive of capital market, less of ad hocism and less of regulatory, let me say, overshooting each other in the market, and let the system calm down. You have a dialogue, you have an industry, you got to do so many things. And this could happen to any industry. I'm just taking an example and saying why we are so worried about mid caps and small caps. Because look at, if the regulatory ad hocism continues, where does it hit next? We don't know. And what will be the impact on that industry? And that's what I use an example of multiplex to say, we need to calm the system down rather than exacerbate by making these populist statements.
Okay, one final comment on this, Ajay. Even if, this whole issue is watered down, I mean, bringing food from outside is struck down by the court. The fact is that prices are very exorbitant, and there's a possibility that the prices of popcorn, etc., may be brought down to MRP. Even if that happens, then that will impact the earnings in the near term, right?
See, so now we have seen the judgment. The judgment says you may not have duplicate pricing. If a water bottle, same water bottle available for 10 rupees outside, should it be available at 10 rupees inside? That was the first debate which High Court looked at it. But that's not the point. The point is every economic activity in a capitalist regime, if an open regime is allowed to price, they're not stupid. PVR is not stupid. Inox is not stupid to price the product at a point where people will stop having it. It's a question of demand and supply. You have a right to choose not to go and go. And if let's take the example of airline industry. If the big airlines took big money out of the table, the budget airlines came in and took the cake away from them. You know, as I say, the cheese moved to the budget airlines. So nobody is stupid out here when you run the economic activity to say, I need to price it at a point where the customers feel. I may feel as a customer that yes, you know, this is exorbitant. Now you may not, I go for a wedding, you may not be able to afford a Sabyasachi dress, but that's what some people can afford. That doesn't mean the government mandates that Sabyasachi should bring his dress down to 1,000 rupees so everybody can afford. Now that's not a logic. Economic activity means price at a point where they believe they can make the best money.
Okay, point taken actually, Ajay. Let's move on then because we have larger market to discuss. Pharma is intriguing because we had a massive top-down move and over the last 2 or 3 days we saw that rally getting punctured. Or do you think it's just a, you know, because of what happened with Dr. Reddy, it's just a setback? And do you think the rally is still intact?
I think the rally is still intact. I think one of the things which we have to live with little patiently is, and I think that's more important for dollar earning candidates, that the first 2 quarters will not show any major growth because of rupee dollar. Because all the exposures are hedged, they are covered, so they will not show any major increase. The real chunk of the money will start to flow from the 3rd to the 4th quarter onwards when some of the hedges expire and the new hedges come into place. So I think, so one big play was rupee dollar in pharma stocks, which will only come into play from the 3rd or the 4th quarter. It will not happen in the next 2 quarters because earlier exposure of a hedge. The number 2 was they are so cheap that compared to what the intrinsic value is, and that's where the play was, that intrinsically it's a high cash flow business, it's low debt to equity business at this point of time, and therefore you will see some amount of resurgence the way we saw IT getting its mojo back. And I think that's the story playing out today. The question is, are you patient enough or are you going to lose hard? Our view is, we have a holding in pharma, we continue to hold pharma now, is that I think it's a patient game, but it will turn around, it will give you very handsome returns in an environment, you know, and it's all relative to the environment. It's in an environment which is so volatile, it's a good place to be. It's a heavy duty, is maybe an oil tanker, not willing to can move easily, but at least it'll keep you out of the choppy seas. So I think it's a good place to be. Keep investing on the top line pharma stocks. There is no issues about it. They will come back and claim their glory and they'll give you a handsome return, even in the volatile environment like what we see going into the elections.
Point taken, Ajay. And finally, they will reiterate their place as a classic defensive. Thank you very much, Ajay Srivastava, for joining us. And with that spirited discussion on PVR and exhibitors.